And I've got a special guest this morning that I would like to introduce to you. His name is Obi Green. As always, we have got...
You forgot my name.
No, I haven't. I'm just thinking how I'm going to introduce her. Lone Laura is what I call her, and I hope she doesn't get offended. That's why I sort of stumbled back. I'm thinking perhaps she's going to get offended when I call her Lone Laura all the time. But anyway, we've got Obi Green here, who is with Ameriprise Financial, and he's just finished giving us some really interesting information on basic budgeting, managing debt and credit, and steps to start smarting, saving, and investing 101. Introduce yourself, Obi.
My name is Obi Green. I am a financial advisor with Ameriprise Financial. Been in the financial services.
Solar panels are coming off.
I don't know what that was.
Do I like start from the top?
No,
Okay.
you're good. Just carry on.
I've been in this business for the last 6 years. I've been with Ameriprise Financial for a few years now, and prior to that, I was a business owner, and that's really where my practice has gone towards, catering towards business owners, catering towards those that are 1099, building their own brands and businesses, because that's just kind of where my heart's at. And I'm all about educating and making sure people understand the full scope of what it means to be financially healthy and what that means and what it looks like. So just a little bit about myself. Born and raised in Dallas, Texas.
I'm sorry.
It's a great place, obviously, but I'm happy to be here. Thank you guys for having me here today.
Oh no, the pleasure is all ours, especially when you've driven all that way just to see me. But I appreciate you coming down.
Sure.
One of the things that we sort of want to go through is, and you gave us this quick reference guide, if we could just go through that quickly. You said basic budgeting, aim for a 50-30-20 budget allocation, 50% towards fixed costs, 30% for flexible spending, and 20% for savings and financial goals. Is that correct?
That is correct. And a lot of times before people become my clients, and budgeting is really the foundation. You know, you can't do much. A lot of people want to invest in real estate. They want to put their money in the stock market, and they want their portfolios to be growing over time. But the reality is a lot of people are in debt. A lot of people have student loans, they have personal loans, they have credit card debt, and they don't have the discretionary income to be able to invest the money in order for it to grow and to do some of the more fun stuff. So when people come to me, initially the 50-30-20 rule is kind of where I start. You know, you want 50% of your income to be going towards those needs, 30% for the flexibility, things like investing, or things that you want to put your money at work with, and then 20% you should be saving 20%. And that's kind of a generic form before you get into the details of personal situations. It's kind of a good place to start.
Absolutely. And then moving further down, it says managing your debt and credit. Track how much debt you have and have a plan how to pay it off. Pay your bills on time to build up your credit score. Make your credit card work for you. And the rule of thumb is don't charge more than 20% of your maximum credit card limit. And I know that helps you, build up your credit score and such like.
Sure.
I think that's sort of pretty standard. I was always told 30%. But I mean, obviously 20% it's going to be better for you. And steps to smart saving: always have a cash reserve for emergencies. That's where I struggle. Mm-hmm. Set a monthly savings goal based on your income. Set realistic goals to work toward. Aim for a debt to income ratio of 30%. That's where I guess where I'm getting confused. One of the things I thought was really interesting that you said downstairs, which I thought was really interesting. You were saying that you can reduce the amount of taxes that you have, correct? If you have a diverse portfolio. Can you just sort of, no, you need to just move that, just make sure we've got you. Can you explain that to us when you said if you have a diverse portfolio, how that can reduce the taxes?
Yeah, absolutely. And this is
is part of the expertise, obviously, that you bring in by going to somebody like yourself.
Sure, absolutely. And the term that I use is tax harvesting. And what we're doing, think about when let's take a company, a very successful company like Apple, right? Mm-hmm. You have
second page, Kate.
you can invest in Apple in an IRA. You can invest in Apple in a 401k. You can invest in Apple in tax-free vehicles like a VUL and so on and so forth. You can invest that same investment, that same stock in multiple different buckets of investments. And that's what I like to kind of educate my clients about. Think of different buckets, right, that you draw from, specifically in retirement and vehicles that your money grows in. Most people are very aware of the qualified plans, which are 401ks, 403bs, things you get through your employer. Right? You fund it pre-tax, it goes into the account. When you bring it out, you're taxed on that. Most people have majority of their retirement funds and growing in that vehicle, which is fine. But if you don't diversify and put some into the non-qualified bucket and put some into the tax-free bucket and put some in an HSA, then you're being taxed at the maximum rate. So the example I gave downstairs is you can put, let's say you had $150,000 a year that you wanted to draw for yourself in retirement. Okay? If you put all of that in a 401k, you're going to be taxed at the full power of the tax code. Let's call it 24%. But if you divvy that same $150,000 into $50,000 in the pre-tax or the qualified plans that are pre-tax, then you have $50,000 in an IRA, which is after taxes are taken out. You fund that, and then you have $50,000 in a tax-free. You significantly decrease your exposure to taxes when you're drawing on that in retirement. You want your retirement funds to be coming from multiple buckets. It decreases your tax liability, and over a long period of time, let's say you retire at age 60 and you live until 90, 30 years, if you were saving $30,000 in taxes, that adds up. Hundreds of thousands of dollars over that time period that you will have paid versus diversifying it and having it paid out at a lower rate. That way you can pocket a lot more of that and use that for, whatever it is that you feel you need it for.
All right. And I thought that was really interesting with you saying that. Let's talk about fill in the blank. If I want to talk about my financial position, you talk to a banker. Protection planning, you talk to an insurance agent. Investment planning, you talk to a broker.
Right.
Retirement planning, you talk to a 401k IRA provider. Tax planning, you talk to a CPA accountant. Estate planning, you talk to an estate attorney. Now, then you've got an arrow all around yourself as a financial advisor.
Yeah.
So what you're saying is talk to them people. What you're saying is you're not giving advice, you're just putting them in contact with them people, correct?
Well, not necessarily. I am giving advice. What I'm doing is I'm coordinating that. Okay. So
basically the accountant would speak to you.
Correct. Because that's when you talk about there's an entire industry centered around each one of those positions that you just named. There's a whole banking industry. There's a whole insurance industry. There's a brokerage industry, 401k. Each one has a massive industry around it. None of them talk to each other. All of them are relevant to your financial health long term. So it's not wise to be planning for your financial future without coordinating them together. That doesn't make sense.
Right. And that's exactly the situation that I'm in at the moment, because I'm hoping to take semi-retirement in the next 2 to 3 years, and I would say 80% of my retirement money is all in real estate, basically because I know real estate.
Right.
I have a very, very small 401k, which would probably, if I pulled all the money, they would probably feed the pigeons in the car parking lot.
Yeah.
Because it really didn't do anything for me, to be perfectly honest. It was never invested properly. And I think this is one of the problems you get when you got all these online systems that are going to invest money for you.
Right.
Because, and then you get this AI that they say they're going to do this and they're going to do that. And I really think you've got to be in a position when, I think one-on-one relationships are invaluable if you really trust that person and you take them on. Are there bad people out there? Are there bad financial advisors out there? Absolutely, just like there are bad real estate agents, and there's bad appraisers and everything else. But the truth of the matter is, I think if you've got somebody, and it's all about teamwork at the end of the day.
Right.
I have actually booked an appointment with my accountant, which will be in February, to discuss what we're going to do with, on a number of retirement issues that I have. And I've also got an appointment with an estate attorney in February to maybe, because I've got a number of corporations out there.
Yeah.
I'm reducing the corporations, like we said to you.
Right.
And doing a living trust.
So you know who you need to book another appointment with, right? Naturally.
Yeah.
No, but it's imagine running a company and having 6 different divisions and none of them talk to each other. That's what is happening. That's what our financial system is set up like. And so it's imperative. That's probably the maximum amount of value that I have, that I can provide my clients. If you don't have a plan, if you have no roadmap to get to where you want to be at, then how would you just jump in a car and drive across country without mapping out your stops? I mean, it's just imperative to have the plan to execute. I don't deal with anyone's assets before there's a plan in place. I'm just going to give a tip to anyone that's watching this when they're whenever you're meeting with a financial professional. One thing, you want to make sure you're dealing with a fiduciary, someone that's legally obligated to work in your best interest. Okay? You gave me the example earlier today about someone that was trying to sell you a policy, for...
Yeah, I don't mind sharing it with you. I have a policy. It's a $2 million policy, and I pay on that. I've had it for years, and I pay $595 a month, and it goes till I'm 76. All right. And then somebody about 6 months ago tried to get me to cancel that policy and put in a new policy for $2,900 a month.
I mean, can you imagine that? Now, did they ask you if you even had a policy in place prior?
They did, but their selling point was whatever I put into this policy, that they would pay me the exact same. It's a whole life policy, but it would pay me back on the expiration of the policy. And my answer to them is, well, that's no good to me when I'm dead. But the point of the matter is, it's not just about the cost of the policy, it's about the cash flow.
Correct.
80% of businesses go under because of cash flow.
Correct, absolutely.
And that's why, I just wasn't prepared to do anything at that point.
It's just imperative to have the full picture before you start messing around with policies, and you really got to understand that person and their situation before you start moving money. And that's just my firm belief. If anybody is not a fiduciary, and when I say fiduciary, there's 2 specific licenses. A Series 7 to be able to handle equities and stocks, bonds, and trades, execute trades, and a Series 66 simultaneously. That allows you to legally give advice. That creates the fiduciary standard that a financial advisor is supposed to have. A lot of people will call themselves financial advisors, but your follow-up question, you should be checking to see what licenses they have. So I would recommend that to anybody.
What are the licenses again? So that we
Series
can
7 and then a Series 66.
I wouldn't have brought...
That's good because, like you said, I do come across a lot of people, they're like, oh, I'm a financial advisor. But whenever I ask them, well, as a loan officer, I have the judgment to always ask for somebody for a license when they say that they're giving me advice, right?
Right?
So I always ask for their license. They're like, what license? And I'm like, okay.
Yeah.
Let's talk about something else. Let's forget the license, because if they ask me back the question like, what license? It's like, okay, then you're just calling yourself.
Exactly. And you
just
can
did
look
some
this
research
stuff up.
and calling yourself.
I just want to sort of widen something out a little bit.
Yeah.
So you said the one point is, how do you spot a bad financial advisor or somebody that you don't want to deal with if they haven't got them to licensing? But even with that licensing, there's still people out there that aren't good.
Yes.
You know, it's just like some real estate agents. And I'm a real estate agent, been in the business for 25 years. Why have I been? I've still got clients that I've had for 25 years that buy properties continuously all the time from me. Why? Because they can trust me and they know. I even turn them away from properties because I've been brought up on it. Something smells like cheese, it's cheese. Get away from it. And basically, with yourself, what are some of the other signs that perhaps it's not a good financial advisor?
Sure.
What sort of questions should somebody ask, you know, to find out, are they a good financial advisor? Are they a good fiduciary? What are some of them questions that they perhaps
Absolutely.
They have our best interest.
Absolutely. That's a great question. Obviously, you ask for the license.
Well,
The second,
because I'll tell you my answer is,
Yeah.
one is, watch this video, all right? And two is, then you know what you should ask.
then you know exactly. That's a perfect plug. There you go. So the other thing that you should be asking is their experience. How long have they been with the firm? Because you don't want to be with someone that's bouncing from one firm to another firm often. All right, you want to make sure that they have, because each firm does business a little bit different. There's a spectrum of financial advisory firms. There's a spectrum of financial services firms. So you need to know that person knows and understands how they do business. That's another thing. Another thing to look for, and this is very important, it's probably the most important. If someone is meeting with you, first time they're meeting you or meeting with you, and they're talking about your actual assets to move, they're talking about the money first meeting to move, I would,
Ron,
I would, because how
you can say it on this podcast.
I'm trying to be, I don't want to be rude to anybody out there, but if I don't
Welcome to America.
I can't, I can't know about you and your situation the first time we've met. I should be spending my time getting to know you and your situation first,
right,
before I talk about any of your financial actual accounts, money being moved, assets being changed hands. That's not what we should be talking about initially. So if they're asking about moving funds right now, first meeting, then I would say, you know what, you should probably continue to search for somebody, because they should be looking more into who you are and what you've been through before they start talking about your money.
Know your story.
Exactly.
Right.
Exactly.
I like that.
And
I
so
do too.
those are just a few things to kind of look for. And
What are
spot.
some of the worst things that you've seen, or worst stories that you've heard, you know, since you've been involved in the financial industry?
Oh man, a lot of them have to do with dealing with people that are that don't necessarily get vetted properly. You know, I'm a financial advisor, don't have the licenses, and now they're handing over large sums of money and getting put into vehicles that don't really serve them. And then, you know, for example,
When we talk of vehicles, we're not talking about Ferraris or Mustangs.
Yeah, we're not. We're not talking about.
We're talking
motor
about
vehicles.
bonds.
Right. We're
okay.
talking about, you know.
Bonds, ETF.
Exactly.
stock.
ETF. Exactly. I have a client of mine that I had acquired that they had been paying into this vehicle for 10, 15 years, and it lapsed on them. They didn't understand what they had. They thought that they had they thought that they had an annuity, but it wasn't an annuity. It was a life insurance-based product, and it wasn't sold or set up properly, and it lapsed because the amount of money that was funding it wasn't covering the total cost of it, and
costs and everything
exactly, and the market changes, and so 15 years, you got nothing to show for it, and that it lapses.
That's a bit of a shock to the system.
It's heartbreaking, but it happens a lot when somebody, you know, being able to design a product specifically for someone, you know, requires a level of expertise.
I tell you what fascinates me about America, okay? They say about all these wonderful freedoms that we've got. Everybody that tunes into the show, I would love to see, we was talking about it coming up, I would love to see socialised medicine, because as you get older, it gets harder. This Medicare stuff doesn't work. They don't pay 100% of it. They don't pay for it if you own anything, you end up losing it. So there's that side of it. And then, you know, the pensions they pay are really low in my opinion. For me, it's even harder because I've only been here for 35 years. How are you supposed to cover, you know, some of your expenses is difficult. And the older you get in the States, honestly, the harder it is, you know, to live. So what it boils down to is, you know, you've got to try and save something, you know, to put out there. And I don't mind sharing my personal permit. You know, I've probably got $1 million to $1.5 million in real estate. You know, all depends how the market's doing, to be perfectly honest. You know, generating, I would have said 7,000-8,000 a month, you know, depending on if all the properties have fallen and such like. And you know, there's a house that I'm selling at the moment. I'll probably get maybe 220,000 cash, you know, out of that to buy my next property. But the truth of the matter is, there's, like you said, it's all up and down.
Right.
And it's a case of, if you invested in something, what you invested in to get a return. And now, being involved in real estate, sometimes somebody will come along to me and say, oh, here you go, here's a property. I might know somebody that has got an off-market property. I want X amount of dollars for it, and it's a deal. I mean, it's a good deal to do, and I might have to fix it up. And then it's a case, well, how do I get to my money quickly?
Liquidity, you know? and real estate is not.
And that's where sometimes I go knocking on the door to Laura or Courtney and say, help, I need some money. So, but you know, at my age, that's not really the best way to go. So what advice would you give to me as an old man?
Well,
approaching retirement.
Diversification of assets is always going to offset the risk of being in any one single place.
Well, I'm interrupting you, and I'm sorry, but
sure.
I had it was my mom's money because we sold a house, and when we sold the house, the bank in England was paying me 0.04%.
Yeah.
So I pulled the money out and I pulled it over to the States, and we ended up paying off a load of properties that we had that were financed, and then we ended up paying off the mortgages, so then we had a positive cash flow coming in. But the problem with that was, when I came to pay my tax bill was pretty high. All right. So what we ended up doing was we did a cash pull from some of the properties, and then what we ended up buying more properties, which gave me, you know, more write-offs. And that's working better. But the truth of the matter is, when you say about having that reserve fund, I haven't really got a reserve fund at the moment. I do have some money in an account which I could use, but it's not really in a specific reserve account.
Yeah.
It's just one of the corporations that I own that I can always go back to pull.
Well, there are situations and places where you can put those influxes of cash into places that help soften that blow for taxes. This is why, when it comes to making those moves, having an advisor in your corner that you can discuss that with before you move it will be beneficial to avoid running into those situations, because it happens. I mean, nobody knows everything,
right?
And it's just important to talk through that, because there are things, there's options for you, and still are, to alleviate some of that.
Right. Kay, can I ask you a question?
Yes, sir.
All right. Kay, who does our podcast, how old are you, Kay?
29.
She's 29 years old. And how would you advise Kay, all right, do you have any savings, Kay?
I have cash savings, of course.
Approximately rough. How
I'm
much?
not telling you how much I have.
Okay, so let's say Kay's got $5,000.
Yeah.
What would you advise her to do to help her grow that amount of money?
Well, first thing is, we're going to set some of that aside to put in.
Because I know that Kay's goal is to buy a house, correct, Kay?
Mm-hmm.
So her goal is to buy a house.
Right. Okay, so you create a sinking fund. A sinking fund is just a fund that you set aside for a specific reason. Okay, these are funds that are gonna grow in a certain manner to achieve that goal. What she has in her corner is time. She's young.
Right.
So
And that's my problem when I
You think I'm young?
you are. Trust me. Like if you start
We're looking at numbers right now.
do you know what I did with the money that I got from my mom? I bought Tesla shares and I bought Nvidia shares and I'm trying to think what else I bought. I bought a load of shares. Nvidia did really well.
Of course.
All right. Then when Tesla did the split, that dick Elon Musk, he's just I think he's a horrible person.
Your neighbor.
Yeah.
Yeah, my neighbour, he just built a new collision centre next door, you know, and basically, I mean, since they've done the split, the price of the Tesla shares has gone down and down and down since they've done the split. And now they're recalling the cars. I don't know if you've seen that yesterday. Tesla's recalling all their cars. So anyway, back to the thing. What would you advise Kay to do with that $5,000?
You want to set an amount aside to put into an investment every month, because that's going to compound over time. You start doing $100, $200.
Dollar cost averaging.
Dollar cost averaging, exactly. You got it. Boom. Dollar cost averaging is the end all. It will solve a lot of retirement problems for a lot of people. Problem right now is people want that right now, but when you're talking investments, this is long term.
Warren Buffett's number one rule is if you're going to invest, it's got to be for a minimum of 10 years.
Exactly. We're talking long term.
And it's the same with buying a house. You know, people say about buying a house. The houses that I buy now, I'm not buying for instant gratitude. And the only reason I'm selling this one and flipping it is normally I keep them is because it's so far away from a management point of view. But what I'm doing is taking that cash and then I'm going to buy another house nearer to where I live.
Yeah. Exactly.
So the dollar cost averaging is the way to go.
It's the way to go.
Now, she's 29 years old. What would you suggest that she possibly invest that in? An ETF?
Well,
stocks?
see, I usually shy away from naming specifics, and this is the reason why. I don't know her exact situation, and I do goals-based planning.
That's a fair comment.
So if she tells me, in this many years want to achieve this, I can create a plan and say, well, these are the best things to do for X, Y, and Z. But my thing is suitability. It may not be suitable for me to invest in an ETF if she has no savings nest egg.
Right.
Let's build that up first, and let's do things in the right order to set you up for long-term success.
Yeah.
So a lot of times they'll ask this question, what should I put my money in? And I can't say that without knowing, because a lot of people may not have. Why would I have you putting X amount in a real estate or an investment product when you're $20,000 in credit card debt?
Oh my God.
We need to be talking about how to get you out of that credit card debt first, because that's 20-something% that you're paying a month.
Right.
And if your asset is growing at 8, 12 on a good year, even 15%, you're still behind, because that credit card debt's eating all of your profits.
And that's the thing with America at the moment. Everybody wants it now. Put it on that credit card.
Exactly, and that's...
Here's my credit card number. There you go. But basically, that was my problem when I bought all them shares. I was expecting an instant return. And I was praying for an instant return. And then I got into day trading. The story is one day, I've told you, haven't I was up $6,700. And the following day I was down $7,200.
Yeah.
It bounces around if you really don't know what you're doing. So for all these people that think they're going to day trade, forget it. Everybody's selling the courses, everybody's selling the mentorships.
Yeah.
That's all they're selling, is they're not providing you the real.
Everybody, a lot of people, they want to invest, and they think that investing is, let me put my money here, let it grow. The reality is, everybody needs the planning more than they need.
Yeah. I know
they need a plan first.
The education.
Right.
Education. They need a
blueprint. I told you, one of my clients that I've worked with in the past has worked in the oil industry since he's 21 years old. All right. recently retired. He's retired to where he wanted to retire to. He's got $4.2 million in the bank now, and he's been living, what's the word? He's a minimalist.
Modest.
All right, and basically, he ends up retiring with $4.2 million. But he's only pulling out a maximum of $50,000 a year to keep his taxes down.
Right.
He's being very smart. He's not pulling his Social Security out till he's 72, because when he's 72, then he's going to get more money, and he doesn't have to pull so much money out of his savings, which will mean that then he can pass it on through his family.
Right.
By doing a living trust.
He must have a good advisor.
Good. I was going to say a good financial advisor.
He must have somebody.
No, you know what he is? He's a bookworm. He won't pay anybody for anything. But he's very, very good at going through. I think him going through with an advisor like Obi or somebody would actually be a better thing for him to do.
But some oil companies, because I worked in the industry, they have financial advisors that you can get information from. So
he won't even spend money from his HSA.
So, I mean, there's a lot of resources when you're working for these big oil companies.
Yeah, I mean, and which is great. It's in everyone's best interest to talk with someone, because you work hard for this. This is your life's work. Right. And people are blowing it on
Which, to your case, as you were mentioning, a lot of us people as 1099s don't really know, what's the steps to take, and we have to lean on a financial advisor, a good one, to get that information.
Absolutely, there's a lot of people.
Because we're not all bookworms.
Well, let me tell you, as a 1099 employee, sometimes I come to work and I cry when I look at my bank account.
You're telling me.
Because when you put all the work in and you work weekends and you see when you go to it, sometimes it's, it takes a bit of adjustment.
Right.
So do you keep people accountable for, like, when you start setting them up in goal plans or that kind of thing?
Oh yeah, that's the key. Like? And so a lot of times what I try to set up is, if part of the system is putting the money where you're not just gonna grab it. If your account is with me, it doesn't mean you can't access it. You 100% can access it, but I'm able to monitor and see what's going on with your money. That's my job. It's like having a CFO. It's a personal CFO. That's all I am. I'm gonna account for all of those dollars, and we're gonna create a plan, because it's not when I talk about a financial plan, it's not verbal. I'm not just telling you. You actually have a physical plan. You can see, you can track it. Your goal is this is how far we are away from your goal, and if you want to get there faster, we can do these things. But you have the accountability piece to actually execute it. Without the execution, it doesn't matter what I say or do. Right. So accountability is key, and being able to have those contacts and calls. I like to have at least 4 meetings with my clients a year, but when things come up, and they will come up, I want to be on the phone. Before that purchase of the real estate, or before you move that, 401k to a IRA or whatever it is, to help with things like those tax hits. And let's talk through that and see what the best move is, so that, we're going to take care of you over the long term, to avoid those, those valleys that you could fall through, because there are plenty of them out there.
There are.
I think it's important too, especially because we are in Houston, and this is the number one city with discretionary income, where people have it to where they can spend it. You can spend it on whatever you want, but why not just invest and make sure that you're actually putting it towards.
But when I was selling the foreclosures back in 2008, there was some people that had their houses foreclosed on that I had no sympathy at all. And the reason was, they had the nicest cars parked in the garage, all right, or garage, as you call it.
Garage. I was trying to figure that one out.
and yet their house was completely being foreclosed and destroyed.
Yeah.
There was one lady we did an eviction on, and we do what we call what we basically used to call cash for keys, and they offered her $5,000 to move. That's what they paid her to move, and we walked into the garage, and there was his car covered up. Being a car geek, I turned around and said, "Everyone, but what's your car?" And it was a $90,000 Lincoln Navigator. Covers on, brand new, smell of leather, you know, and she signed all the documentation. She wouldn't let me go in the house. When we went in the house was an absolute disgrace. The kids had written on the wall. It was an absolute mess.
Well, now they can live in the Navigator.
So she needed a financial advisor.
Yeah.
But it takes at the end of the day, it's all about discipline.
Like my friend buying a $5,000 dog
Oh yeah.
Oh wow.
before closing on her house.
Was it
That's gotta be
from
fresh.
Petland?
Huh?
Was it from Petland?
Yeah, I think it was.
That's not.
I think I went back and looked.
Petland aren't
Yeah.
real breeders.
So I was like, she's like, I'm
They're
making a
not
payment on my
AKC registered like they claim to
dog,
be.
and I'm like, oh, that's good. I'm like, hope he gets better. No, I bought a dog.
Sometimes it's infuriating when you see some of the situations. So I had a client one time who they make a great income, but they had a lot of credit card debt. And you know what they decided to do? They decided to buy a $65,000 brand new car
Well,
at a 9% interest rate. And I'm like,
I'm covering my head up.
that hurts. Like I was like,
I'm covering my head up because I've done that.
yeah,
I've done that.
yeah.
When we had we had 5 offices at one point, and because you've got this cash coming in that you think will cover your debt, when it's all bright and breezy, you think great. So I went out there and I bought myself AMG SL 63. There was only 500 of them in America, and that's basically what it did. And the cost of running that car afterwards, I thought, to hell with that, I'm not doing it no more because of the cost of it. And I bought myself a Lotus, then I bought myself an Alfa Romeo 4C. I ended up selling all the cars and thought, you know what, to hell with it, I'm just going to invest in my real estate. Because when you get to the end of the day, you've got nothing to show for your hard work.
Right. I mean, the thing is,
I work 6 days a week, just like Laura. You work 6 days a week, don't you?
Mm-hmm.
That's a lot.
Did you go to church on a Sunday?
Yeah, I go to church on Sunday.
I was going to say, if not, shame on you.
No, that's
I'm
my
an-
day.
I'm
Nobody touches.
I'm an atheist, so you can't say the
Yeah,
same.
you have the right to scold me if I don't go to church.
it's always good to have some oversight, someone that's looking after
My
those
interest.
decisions. Yes, because it just happens so often, and it's really unnecessary. If you have, my thing is if you're going to spend your money on something, if you have the discretionary income to do it, go for it. If you don't, then it better be producing income for you as well. And so,
What are some things that can produce income for a person?
look, a car can produce income,
It
but
can if you drive for Uber.
if you do Uber, then it makes a little bit more sense to get a car. I don't know, at that price point it makes sense, but it can produce income for you.
Right.
Vending machines that are
Had that business.
yeah. I mean, that's something that can generate income. There are
I know.
online
I'll look in the
e-commerce
garage and see how many
businesses.
I've got left.
Steven is supposed to sell me a vending machine.
I wasn't going to sell you one. I was going to give you one. I'm sure I've got a few more left in the garage.
I have a friend.
I had a
does
vending machine with I had 240 vending machines at one time.
Wow.
One of the best businesses I've had.
But you're correct with the cars making you money. I have a friend who does Uber Eats and like Instacart, and they don't quit until they make like $100 a day.
But the
after they work,
beauty of Uber Eats
not bad.
is you can pick how much tip they're giving you.
No, you choose. No.
Is
you
it
choose.
Instacart, which is the one where you can actually pick how much tip they give you?
I don't think you can choose how much tip they give you. I think you can cancel it if you see that they don't give you a big enough tip and you don't go and pick up the order. I've had someone not. They said that they delivered food to my apartment when one of my friends was over, and she didn't tip him, and he just took a picture of the food outside of my door and said he delivered it, but he never delivered it. He took it back with him
I would have
because
took
she
it.
didn't tip him.
They can see that before they deliver, though.
They do the
Yeah,
math. They do the math.
Some of the apps, it says how much they tip.
Yeah.
'Cause I was speaking to somebody out here, you know, and I said, look, I'm looking at retiring, and you know, I don't want to stay at home all day. You know, I imagine myself being a Uber driver.
You know, you make a good point, though, because one of the things that I harp on people that are getting ready for retirement or going to retire, it is imperative to retire to something. To just retire, it's only a matter of time before
I just want to do something
the boredom
different.
kicks in, and then
When my
my
dad worked till he was.
There's no why anymore.
Yeah,
My
That's
dad
all.
was working till he retired when he was 81, and he died by the time he was 85, 86.
He retired at 81.
people need purpose.
He was self-employed. Worked as an engineer.
Mm-hmm.
Yeah, he used to go to work in the morning, then go to the bookies in the afternoon and gamble on his horses. He didn't used to go to work. He used to go and read his sporting papers on the horses, then go gambling in the afternoon. But at least it got him out of bed.
Yeah.
Yeah, his financial advisor would not be happy about that.
Well, he had a partner, and I think the partner was doing the work. He ended up giving the business to the partner.
Mm.
Anyway, I think that's been actually a pretty good. Do you have any more questions, Laura?
No, we were taught. Just do you have any other ideas about how to make?
You talking
build
about
money,
income
sorry.
producing assets.
Income producing assets.
You
sorry.
know, there's so many ways. E-commerce businesses. You know, people can
Yeah,
sell.
that's a new thing.
Definitely, and it's
Drop shipping.
the drop ship. You know, drop shipping is so normal now.
That's true.
I had a drop shipping business a decade ago that was very successful, but that's always an option. There's services you can sell. There's just a lot of different ways to make money. But if you're going to invest into something, if you're going to go buy something, make a purchase, if income producing assets, compounding interest, compounding the money that you're spending, that's how you can set yourself up for the future, and that's the name of the game.
I mean, I'm not a financial advisor, but my rule has always been don't invest in anything unless you're willing to keep it for 10 years. I don't know if that's an old-fashioned, you know, unless you can make, you know, some money on the property or even, you know, the product. I know that I've got an automatic IRA and it's just about kept up with inflation with what I put into it. And I put the maximum in every year.
Yeah.
But, you know, it hasn't made what I'd like. You know, it's through T. Rowe Price, and it's one of these. It's a SEP IRA actually.
SEP, okay, you do
Yeah,
have one.
and basically it's set for retirement at 2025,
Gotcha.
which is when I'm 65. What happens then? Does it just stop, or can I continue to invest? Or
Well, I'm curious to see how it was set up. If it has any flexibility to change, or if it's a hard stop. Just depends on how that SEP was
because
set
at the
up.
end, don't they do it as a growth stock?
Typically, but if I would not have it as a growth stock if you're close to retirement, because it should change as you age.
Right.
You know, you start off more aggressive, and as you age, you
Then
get
it
more
becomes more
conservative,
bonds at the end.
so that you're not you know, it's more about conserving the wealth that's
Gotcha.
accumulated
No, I
versus.
see that. I get that.
So typically, by the time you're close to retirement, it's not in the growth phase; it's in the preservation phase.
Gotcha. All right. Well, you've been a great guest. I want to
Yes.
thank you, Obi.
Thank you very much for
for
having
coming
me.
in. I really
Thank
want to
you.
thank you, and you've been very educational. I really want to thank you. So how do people contact you, Obi? I know you're up in Dallas, and
Yeah, my office is in Plano, Texas. most people will call me, my cell phone, 813-285-6032, or by email. My email address is obi.green, like the color, at am as in Mary, p as in Paul, f as in Frank.com.
That'd be great. And I hope that, you know, people contact you, and I hope that we've provided some value, because that's what we're all about on this channel, trying to provide value to people. And if you want to get hold of Lone Laura, how do we get hold of you, Laura?
You can contact me at laura@lspmortgage.com or social media.
Okay. And how do we get hold of you through social media?
Laura Mortgage Boss.
There you go. And I said we need the angle. It's a bit like the radio, you know, the old-fashioned radio. We need the angle. Or you can contact us through Century 21 Olympian. Find us on Google or social media at C21 Olympian TX. And we are more than happy. And we'd like to thank the producer of the show, Kay, over there.
Yay.
Yeah. So Kay's the one. She's actually got about $10,000 in savings. She's been saving up real hard.
In her pillow.
If I win the lotto tomorrow, don't worry, I'll make sure you was okay, Kay.
Thank you. I'm robbing you.
All right, guys. Thank you so much for tuning into the Texas Real Estate Show. We will have the last show of the year next Thursday around 12:30. Please tune in. We'd love to hear from you all. Until then, same time, same channel. See you next week. Ta-ra for now. Peace and goodwill to all.